Wall Street ended the week with big gains. The Dow was up nearly 200 points after the strongest jobs report in 5 years. Employers added 203,000 jobs in November, and the unemployment rate fell to 7% nationwide. So what does that mean for the economy? CBS News contributor and analyst Mellody Hobson joins us now from Chicago. Good morning to you, Mellody.
Good morning.
So I've sort of covered all the good news. Was there any bad news in the latest report?
There was a lot of good news in that report. I mean, 203,000 jobs you've mentioned. The September and October numbers were revised up. The unemployment rate hit a 5-year low at 7%. And where the jobs were coming from, that was great news. Construction, professional services, manufacturing, those are higher paying jobs, which is why we saw wages by the hour go up for the month, and also the work week be a bit longer. So if you look across the board, the news was very, very good.
Mellody, the Dow rallied 200 points on this, which is interesting because in recent weeks, when there's been good news, the Dow has tended to pull back, in part because it's afraid that that'll mean the Fed will start pulling stimulus out of the economy. So why did the market go up yesterday, do you think?
I think there were two things that went on at once. Yes, it's been a pattern of good news being bad news. This was finally one where good news was actually good news. The market shook off a 5-day slump. And I think it was two factors. One, the unemployment report joined with the economic report that we got, and specifically the third quarter GDP, gross domestic product, being revised up, giving a sense of the economy. Economists thought that we grew 2.8% in the third quarter, when in fact we grew 3.6%. A lot of that had to do with private companies stockpiling inventories. So people say, well, that's just a blip. We'll see those growth numbers go down in the next quarter. And I say, why would all these private companies be filling up their inventories if they didn't think things looked good? So the taper, the Fed pulling back, and maybe interest rates rising is back there. But I think overall people see real economic strength.
In 12 days, the Fed Open Market Committee is going to meet. There's been a lot of talk about the possibility of bond purchasing being stepped down. Is that a possibility now? Is that what people are thinking in the heels of this report?
I think it's inevitable in 2014. I don't think we'll see anything come out of this next meeting because I think they're going to wait and see what happens with Congress, and hopefully they get all the budget and debt ceiling and all those things tied up, which of course caused a lot of trouble in the third quarter. But the Federal Reserve governors, who are like America's bankers, they've been keeping rates super low by buying $85 billion in treasuries and mortgage-backed securities every month. They said they're going to start to pull that back. One of their guideposts was 7% on unemployment. We hit that number. So it is inevitable in their January or March meeting that they'll signal to us that they've started to taper, as they call it.
Mellody, one last thing. At this time of year, a lot of people stop looking for work because of the holidays, obviously. Is this a good time to actually look for a job?
It's interesting. It actually is. Most people don't think that it is the case because they say, it's the holidays and things slow down. But it actually tends to be a very, very good time to look for work because people are planning for their next year. And also, there aren't as many people out there looking for a job because so many people say, well, I'll take the holidays off and restart during the new year. So I would strongly suggest, if you are looking for a job, to keep pursuing one during these final weeks of the year.
Mellody Hobson in Chicago this morning. Thank you so much.